Well, hello, America. If you're watching this program tonight instead of a, real financial network, it's probably because you're looking for a dose of reality. So let me get right to the point tonight. We finally had a chance to take a baby step towards fixing our economy for good, and we blew it this morning, and here's how I got there. While the U.S. markets were saved by Dr. Martin Luther King yesterday, world markets were not. They paid a heavy, heavy toll. Newspaper in France said simply, crash. The Sydney Morning Herald in Australia called it Black Tuesday, and as an example of how global this crisis really is, even a paper in the Czech Republic led with this bleak picture of an anxious trader. All of that chaos set the stage for what looked like to be a very ugly opening on the Dow this morning. And then, just as we are about to take some well-prescribed medicine, or well-deserved punishment, you take your pick, in stepped the Fed once again to bail us out. In a rare emergency meeting, 2 key interest rates were cut by 3/4 of a point. It was the first emergency cut since September 2001. Also, the first cut of that magnitude since October 1984. Do the words desperation and panic come to mind? The end result was a Dow that plummeted 464 points at the open, but then just finished down a relatively minor 128 points. Whew, everything's okay, right? Wrong. If you're looking for a market cheerleader who will tell you that everything all of a sudden is sunshine and lollipops, again, you got the wrong show. The Fed did today the same thing that they've been doing for years. They put a Band-Aid on a gunshot wound, and then they give us a couple of Tylenol to dull the pain and say everything is fine. Well, that's not a cure, that's a distraction. And I know nobody wants to hear it, which is exactly why no one of any importance ever says it. But we must be allowed to go through the pain if we're ever expecting to heal. Let me put it this way. If the Dow would have dropped 1,000 points today, everybody would have panicked. You would have had people screaming everywhere. Today, tomorrow, however, you would have found a ton of people that said, buy. Now's the time to buy. Look at all the deals. But after today's gentle 128-point drop, it's going to be hard to find those people tomorrow because they still think there's more to come. So tonight, here's what you need to know. Just as we overprescribe antibiotics and we've created a flesh-eating superbug, overprescribing quick economic fixes created this crisis. And you only need to look back at recent history for proof. Earlier this decade, the Fed was so concerned about the recession in the wake of the tech bubble that they swooped in and slashed interest rates 12 times in less than 2 years. The result? The housing bubble, the credit crisis, and now a stock market that has lost over 2,000 points in 3 months. Jeff Frankel is an economics professor at the Harvard Kennedy School, and Peter Schiff is the president of Euro-Pacific Capital and author of Crash Proof, How to Profit from the Coming Economic Collapse. Peter, let me first start with you. I had you on, I don't know how many months ago, and everybody said to me, this guy's crazy. You're starting to look more and more like a prophet. Today, I don't believe, with this 128-point drop, anybody worth their salt actually believes this thing is over.
No, of course not. I mean, first of all, the only reason we were down 120 points is because of that rate cut. I mean, what's going to happen the next time the Dow drops 500 points on the open? Is the Fed going to be able to have another rate cut? You know, you said it in the intro. We've got to take our medicine. You know, it's the same thing with this stimulus package. What do they want American consumers to do? Spend more money. Well, how did we get into this mess? We spent money we didn't have, and now we're struggling to pay the debt, and the government wants us to spend even more.
Jeff, I said this on the radio today, that I understand the economy because I'm a dad. I'm a dad. If I want my children to be strong, I don't give them what they want, I give them what they need. And sometimes it hurts, but it's the right thing in the long run. You think yet another Fed rate might be on the way.
Well, it's quite possible. I mean, you two are taking sort of an unusual position. Everyone else in the financial markets is saying, oh, it's too little, too late. I have a lot of sympathy with what you're saying. I do think a lot of our problems are stemming from excessive monetary ease for the last 7 years and excessive fiscal expansion for the last 7 years. We've dug ourselves in a pretty deep hole. Having said that, I think some amount of monetary easing at this point and some amount of fiscal easing, is, if it's done correctly, is probably in order. But okay. I agree with you. We can't do much more of it.
Okay. So hang on. So let me go back to that here with you then. The only reason why I would support anything is to have the market take a gentle fall and to gently land instead of fall out of the sky, like it could. However, we're talking about a massive spending bill to give $800 as a tax rebate. I heard last night to people who don't even pay taxes. How is that going to help anything?
Well, it's not. And then, of course, Americans are going to take those rebates, assuming they don't do the responsible thing and pay off some of their credit card debt or their mortgages, and they go out and buy something like a new plasma TV. We're buying products made in other countries. We're just borrowing money to run up our trade deficit. We're creating more inflation, which is putting us into a deeper hole.
Jeff, agree or disagree?
Well, I agree with a lot of that. But first, with this, any talk about giving tax cuts to people who don't pay taxes, we want to be very clear here. The tax cuts, which have been truly massive, that have been passed over the last 7 years, have gone overwhelmingly to the rich, to some extent to the middle class, and not at all to lower income working Americans, including, I'm sorry, they do pay payroll taxes.
Payroll taxes, they're going to get that money back, supposedly, through Social Security.
They'll never see that. We all know that.
We've properly focused on incentives in this country, and we realize that incentives are important. If you're trying to lift yourself out of poverty and work yourself up into the middle class, we have a high marginal tax rate now, including the payroll tax and including when you do move into paying income taxes. All the past tax cuts have gone primarily to the rich. And I think it is time to give some of it to lower income working Americans, both because they're going to spend it.
Nice of you to join us, Stalin.
But what about
this redistribution of
wealth? But the people who are getting hurt the most by the inflation tax, which is what the government is giving us with these, the stimulus package, they're creating money, they're debasing our money, and we're getting inflation. And it's the poor people who are struggling with higher food prices and higher energy prices as a result of what the government is doing.
Jeff,
why is more inflation going to help the poor?
Here's my point. I say the real cure is you cut spending, you stop the government from spending all of this money, because that's what's really coming down our road and breathing heavy down our necks in about 4 years. Beyond that, if banks got greedy, let them pay the price for it. If you signed an interest-only loan, you are too stupid to own a house. You should lose the house. Let the people that made mistakes pay for the price. Pay the price. Why should the American taxpayer come in and bail out a system and let them not feel the pain? Do you think anybody's going to learn the lesson?
You're right. They shouldn't.
Jeff?
You're talking about the principle of moral hazard, and you're entirely right. This administration has been very big about talking about it and then bailing people out.
It's horrible.
The problem is,
horrible
we can't afford to bail anybody out. The government doesn't have any money. The government can only create money out of thin air, which means it debases everybody's savings. We can't bail out ourselves.
Well, I mean, after the hundreds of billions of dollars we've had in tax cuts for the rich, and after the rate of increase of spending, which has been 3 times higher in this decade than in the 90s, I think we can afford a little bit of a fiscal stimulus package.
We can't afford anything. We're broke.
You're exactly right. Let's just cut it all off. Thank you so much, Jeffrey, Peter. I appreciate it. We'll continue this conversation.